Tesla shares rising today after CEO Elon Musk vows to refocus on the company, taking a step back from his role leading the Department of Government Efficiency under the Trump administration. He'll be involved just 1 or 2 days a week. This comes after the EV maker's first quarter profits plunged 71% from a year earlier. The automotive revenue down 20% year over year. Here's Musk on the earnings call.
The large slug of work necessary to get the DOGE team in place and working in the government to get the financial house in order is mostly done. And I think starting probably in next month, May, my time allocation to DOGE will drop significantly.
Joining us now, Dan Levy, Barclays Senior Autos Analyst. Dan, great to speak with you. I know you predicted that a good narrative could outweigh weak fundamentals on the stock, but you still have a hold rating on it, even though that's exactly what we're starting to see play out in the stock market action pre-market this morning. Where do you stand with Tesla after these results?
Yeah, thank you so much, Madison and Brad, for having me. Look, I think this is the challenge with a result like this, is that you're balancing on one side what was fundamentally quite a weak quarter, gross margins that, while a little better than anticipated, were still in the absolute one of the worst levels we've seen in a decade plus, a reduced volume outlook, weaker commentary on margins as far as tariff impact, et cetera. But on the other side, you're balancing it against a more engaged Elon Musk and a robotaxi opportunity that is overall, I would say, fairly intact. So we try to be balanced with those two. That's what keeps us equal weight, but we acknowledge, hey, this is net probably positive.
What's the likelihood that they deliver all of these things on time? Robotaxi, humanoid robots. You've also got better mass market vehicle, more perhaps price sensitive to the demand in the market right now. What's the reality of them actually achieving these in the timelines that they've set forth?
Well, Tesla's never been very good on hitting their timelines. And they've had some products out there that have been, always concepts, right? Think about how long we've had Roadster in the works. Semi has never really ramped heavily. All of these things, have been sort of in the works. But overall, they've had a good track record in aggregate on ramping on some of their new technologies. It's just the timelines have always been mixed at best.
I guess, Dan, just help me understand. You said something fascinating, that you're keeping yourselves equal weight, but you acknowledge that this is probably net positive. I can't imagine someone telling me they're net positive on a stock after some of the numbers that we have seen on this print. Walk me through, what is it about this print that makes those abysmal numbers easy to look through? What am I missing?
Well, I think this gets to the fundamental question of how do you evaluate stock between fundamentals and narrative, right? And the pendulum is constantly swinging back and forth. At some point, weak fundamentals should play a role. And, just to give you a sense, our EPS estimate for 2025 is now roughly $1.68. This is into the year. Consensus was north of $3. We thought that this could be a growth year. And in fact, with the tariffs, with weaker top line, it's a challenge. But I think we all know that Tesla is not a stock that you pick your 1 or 2 year out EPS number and apply a regular multiple. This is much more about narrative. This is much more about excitement. It's a comp to Bitcoin, right? That Bitcoin is something we always say is the closest comp. And as far as the narrative goes, what we got last night was it held in okay. And that's why net on this result, in the very immediate term, it's probably net positive.
As we're seeing some of, as well, the kind of net positive price targets that are out there from some of the largest bulls in Tesla, from what you were mentioning a moment ago, even the thought process around how Tesla could even be in the same neighborhood as an investment, perhaps, I don't want to say thesis, but the investment mindset that would even permeate around Bitcoin, that would say that Tesla is only able to get back to some of those most bullish price targets if there is a purely risk-on narrative that re-enters into the market. And maybe that's the wrong evaluation, but I'd love to know your thought process around what Tesla needs in order to actually reach some of those targets that are starting to be set forth by the largest bulls out there on the street.
Yeah, it's a couple things. And I think you raise a good point. Definitely a risk-on environment, an environment that's more engaging of speculative assets helps. This is what we saw with the stock rally late last year, where it was completely disconnected from fundamentals. And in fact, anything fundamentals deteriorated on the margins, right? So a risk-on environment certainly helps. Look, I think over time, these growth opportunities do need to be judged. So we have to see where we are in terms of, okay, are they actually scaling on robotaxi and autonomous? Is Optimus actually materializing into something that's helping them? These are the areas where we have to see how this all plays out over time, and maybe that can help. But I think it's that plus, as you mentioned, returning to more of a risk-on environment.
Dan, good to see you this morning. Thanks so much for helping us break down some of the earnings.
Thank you so much for having me.
Certainly. Tesla getting several price target cuts following weaker than expected first quarter results. Automotive revenue down 20% year over year, while total net income was down 71% from a year earlier. Here with us now, we've got Stephen Gengaro, who is the Stifel NextGen transport analyst. Good to have you here with us. You're bullish on Tesla, despite some of the warnings that we've heard from other analysts. How are you evaluating the company post-earnings and what we heard from Musk on the call?
Yeah, thanks. Good morning, and thanks for having me. So when we look at Tesla, and we've talked about this pretty often, is the near term is going to be bumpy, and we have seen the data. We actually have a group within Stifel that runs these really good surveys on favorability ratings, et cetera, and we've seen this sort of significant drop in net favorability rating towards Tesla, and that clearly was a headwind for sales in the quarter, along with some other things. I think people speak a little bit less about on social media, but the reality is they were rolling over production on their most important vehicle, the Model Y, throughout the quarter. So that had an impact as well. And the results effectively were weak, but I think they were expected to be weak. When we think about the company, we look past the short term and really look at the story that's developing around full self-driving and robotaxi, and that's a huge part of the value creation for the company over time.
And I'm curious whether or not that forward-looking story that you talk about is still intact, given some of the branding challenges. Investor Ross Gerber spoke about those challenges with Yahoo Finance yesterday. Take a listen.
Tesla is fundamentally a different story than where it was several years ago. I mean, Tesla was a massive growth story. Now Tesla is a very mature EV maker with a CEO who doesn't work there. People just don't want their products, even though they're the best products in the market. So I don't know how they solve this. So I think Tesla's best days are behind it at this point.
Stephen, with that in mind, can you put the genie back in the bottle when it comes to Tesla's branding problem?
I think you can. It's one of the things we talked about in a recent report was we kind of look back at things like the Bud Light I don't want to call it scandal, but the Bud Light issues that they faced, the issues with Nike and Colin Kaepernick, the issues with Target for a short period of time when they had the whole transgender bathroom discussion, and kind of these things are sort of these corporate positions which can impact the companies, they can impact sales for a short period of time. And I think that's why the news last night that sort of somewhat expected, but the fact that Elon has talked about taking a lot more time at Tesla and a lot less time maybe in the public eye as part of the government, I think was so well received. Now the duration of sort of the impact of his involvement clearly is hard to gauge, and how that kind of plays out from a sales perspective. In the world of, X and social media, we kind of, we hear the barbells on most issues, and a lot of what we hear, clearly on Tesla has been negative from the far left, and cars getting keys and vandalized, et cetera. But the reality is they still sold a lot of cars in the quarter. They mentioned on the call the order flow on the Y, and the new Model Y has been very good. So I think this sort of does dissipate over time, but it remains a short-term headwind for sales.
It's interesting because you typically had, and just acknowledging that we still don't have the firm reporting on exactly who was behind a lot of the vandalism and everything that you were mentioning a moment ago. So just want to be clear on that. But all that taking place does have a longer term type of mind share kind of, it sucks up a lot of the attention in the room away from what the company is trying to do at the end of the day. And so how long does it take for Tesla to regain that or put that at the top of the list for potential car buyers? Oh yeah, at a time where buying a lot of vehicles right now is perhaps very expensive for many people out there who are just trying to evaluate, if they're going to be able to use a tax incentive, and they're not going to be able to, it sounds like, in the near future.
Yeah, but it's interesting. You obviously you have the macro, right, which is sort of the economy, the environment, the consumer, inflation, et cetera, interest rates, and then you have the maybe the micro on the company side. The reality is they have been affected, right, and we see it in the data. And one of the really intriguing things that we saw in some of the data that we have is that the willingness of Democrats versus Republicans to buy EVs is pretty significantly different. Part of it's geographic, right? Because the charging infrastructure is more on the coast, and range anxiety and charging is kind of a big part of buying an EV. But the other part of it is a bit political. And what we've seen actually pretty interesting over the last 6 months, maybe 4 to 6 months, is the Republicans' willingness to buy a Tesla and the favorability rating has risen sharply, and the Democrats has dropped significantly, right? So are there enough kind of Republicans buying Teslas that's going to offset that? Probably not. But I do think that, the impact of Elon's political involvement and the hatred we've seen online, et cetera, it will dissipate. Is it going to take a month? No. Is it going to take 2 years? That's probably not. So I think you'll start to see those buyers come back to the market. Yeah. I read something, I think yesterday, just about, Tesla sales in California were still extremely strong, right, in the month of March when the new Y came out, right? So I think it's overblown. It has an impact, but I think it's a bit overblown in the media.